Hello everybody and welcome to this week's newsreel. Bogdan here, your host for the next couple of minutes. I hope that you are all doing great, guys, and lots of things happened last week. We have the final report coming from the Federal Maritime Commission in the United States. We have some shipping related news. And finally, at the end of the video, I will try to briefly pass through a couple of news related to the socio-economic developments in Turkey, Middle East, India, and China. But more on this later, as now I will move to the quiz question that I prepared for you for this week, which relates to Slovakia's exports, and it goes like this. To whom did Slovakia exported the most in terms of value, of course, in 2021? And the options here are Germany, the United States, or France. And guys, the correct answer is Germany, with some $22.8 billion worth of exports, from which $9.7 billion were vehicle-related exports coming from Chapter 87. And now you know that the auto industry in Slovakia is a very, very important one. And now moving on with this video, let's see together how the Freightos index moved. And by the way, guys, they've recently announced that they are going public on NASDAQ through a SPAC move, and this is just for information. And anyways, as I was saying, let's see how did the general index behave last week. And here, contrary to my expectations, it fell even more from $7,851 to $7,370. So a 6% drop, with a big volatility here on the North America West Coast to China sub-index was up 2%, and China to North America East Coast sub-index was down 13%. Now, in terms of the main head holes, as usual, I will start with the Trans-Pacific ones, and we have $10,076 for the sub-index connecting China to North America West Coast, and $12,663 for the one connecting China to North America East Coast. As for the cross-Suez ones, again, not that much volatility. We have more or less the same values as we had in week 21. And basically for the sub-index connecting China to North Europe, we have $10,599. And for the other one connecting China to the Mediterranean, we have $12,781. So guys, what the heck is going on here? Didn't the inventories move from the warehouses in China to Europe or the United States just yet? I don't know. Did the retailers cancel their orders, or I don't know, Shanghai reopenings still lags in some respects, or I don't know, big uncertainty because of the Russian invasion and the inflationary pressures are finally being felt? Well, frankly, my guess is that we have here a combo of all the factors mentioned by me earlier. Tough times ahead, and as I've said at the beginning of the year, I feel sorry for the importers from Europe and the United States who locked in contract rates when they should have played, if you ask me, a more balanced game, allowing some room for the spot market. And yes, you could say, okay, Bogdan, you couldn't foresee the invasion of Ukraine, or I don't know, the lockdown in Shanghai. And yes, absolutely, you are right. But the weight of these events on the freight market is not that high, if you ask me. And basically, what drives the fall in the freight rates are, I don't know, fundamentals like inflation and the lower demand for finished goods. And most importantly, the wrong finished goods, as people, let's be serious here, shifted their disposable incomes towards services, as countries finally lifted their restrictions strategically, if you ask me, at the beginning of the spring, at least in the northern hemisphere. It's just my personal opinion. I might be wrong, of course. So if you have other ideas, please share them with me, with us, in the comment section below. But anyways, this is the current Freightos index. Let's see how it will develop further. And personally, personally, I'm waiting to see if the carriers, at least those from the alliances, have other aces on their sleeves in order to somehow contain this inevitable descent. And now, guys, moving on to my first news. I have one coming from the United States Federal Maritime Commission, who on June the 1st released the investigation results into the container carrier supply chain. And I won't lie to you, I'm a little bit disappointed, as one of the conclusions of this report is, and I quote here, the current market for ocean liner services in the Trans-Pacific trade is not concentrated, and the transatlantic trade is only minimally concentrated, end of quote. They say that competition among ocean common carriers, among the three major alliances and among the members in each of these alliances is also vigorous. We have then a couple of final recommendations, and guys, I will cover here the most important ones, at least from my personal point of view. And we have a rulemaking to provide coherence and clarity on empty container returns practices and on earliest return date practices. And finally, if you ask me, the most important recommendation coming from the Federal Maritime Commission, and again, I'm quoting here, the fact-finding officer further believes that the most productive path towards forward for the shippers and ocean carriers alike would be to enter mutually enforceable and binding service contracts. End of quote. Again, all these are recommendations, and personally I think that I don't know, in the context of lower freight rates, lower demand for finished goods, inflation, and a lot of other uncertainties, these won't be put in place. And basically, I'm afraid that we will have another document on the table of the Federal Maritime Commission to show, I don't know, in 5 or 10 years' time, when the cycle will repeat itself, as we had with the 2018 Federal Maritime Commission document, who highlighted more or less the same things. And guys, I was saying that I'm a little bit disappointed, and I want to tell you the 2 reasons for my disappointment. Well, the first one is related to how the team measured and came to the conclusion that there is no concentration, or if there is, it's quite minimal, quite negligible. And here, of course, when you measure with the one-size-fits-all Hirsch-Herfindahl index, you will have distorted results, as, let's be serious, guys, the size and scale of these behemoths has to be measured with other tools, more proper tools. And there is one research paper that I've talked to you about in a previous video, coming from Antonella Teodoro and Olaf Mark, who both came out with an alternative approach on how to measure concentration in liner shipping. That's one reason. The second one is related to who basically participated in the debate. And if you look at the appendix, you'll find Fortune 500 companies, commodity traders, a lot of shipping companies, of course, some terminal and port authorities, but personally I couldn't find some representatives for the small and medium exporters or importers from the United States. And for me, this is a big question mark on how and who pulled the levers there. Anyways, I'm not here to further complain. I'm here to share some of my ideas with you. You're more than welcome to debate. And without further ado, guys, I'll move on to my second news. It's coming from containernews.com, and it's about Timor Port, which is a subsidiary of Bolloré Ports, who received 2 tugs, 2 ship-to-shore gantries, and 4 rubber-tired gantry cranes for the enhancement of operations of the deepwater port in Tibar Bay, located in East Timor. This is part of an ambitious investment plan done by Bolloré, aimed at making from Tibar Bay a transshipment hub and a major gateway to the Asia-Pacific area. And what I see between the lines here is that Bolloré is betting on this part of the world in terms of new growth opportunities, or I don't know, a new growth pole. And personally, I also believe that this zone in the next 15-20 years the exchange of the finished goods, and I underline here the exchange of finished goods, will be more regional in scope. So this was my second news. Now I will move on to my next news. Coming again from containernews.com, it concerns cash-strapped Sri Lanka and its current struggles, as shipping agents in Sri Lanka have warned that shipping lines could stop accepting import and export cargo to and from Sri Lanka, as they are falling to remit freight charges due to the ongoing severe foreign currency crisis. So, guys, quite difficult times in Sri Lanka, a lot of uncertainties and volatility with Vietnam's, Bangladesh, India's, and in a smaller amount, Chinese apparel manufacturers benefiting on the long term if the current crisis is being prolonged. Now, moving on with the news, as I don't want to make this video too long, I have one from Reuters.com, and it's covering the soaring Turkish inflation, which reached 78%, the highest since 1998. Although here some economists from Turkey are questioning the reliability of the Turkish Institute of Statistics figures, and they believe that inflation is far higher than the official data. My guess is that the inflation will be a little bit dampened in the short term, with the summer season just around the corner, as a flux of tourists from Europe will flood into the Turkish resorts. It's just a band-aid measure, of course, so on the medium and the long terms, they will have to rethink how to break this vicious circle and, I don't know, find a way out of this staggering inflation. And guys, with Turkey being covered, I will move on to China, which is my fifth news, if I'm not mistaken. Yes, fifth news. It's coming from ING Think, and basically their analyst expects that the PMI, so the General Manufacturing Purchasing Manager Index, is going to recover above 50, so expansion. The readings above 50 are expansion, below 50 is contraction, sorry. For both manufacturing and service sectors, activity in June. Again, according to the same author, the main concern is that future lockdowns will still continue to hurt economic activity. And finally, here, in terms of 2022 GDP, a 3.6 forecast has taken this possible scenario into account. And now, guys, with China also being covered, I have an article coming from indiatimes.com, and it covers India's prime minister views on how Europe and the West are somehow egocentric. It gives a lot of valid points, and I won't say more here. I leave you the pleasure of reading, or even better, to watch his statements. I highly recommend it. And of course, I will put also the video link in the description below this video. And guys, this is the news covering India. And now my last one, coming again from Reuters. It's about the United Arab Emirates and Israel, who both signed a free trade pact aiming at cutting tariffs on 96% of the goods traded between the two countries. And if you ask me, here, it's more than a free trade agreement. It has a lot of geopolitical weight. The United Arab Emirates embarked on a new development strategy aimed at decoupling more and more from the oil exports, while Israel is somehow planting the seeds for future development in the Arab world. So basically, the United Arab Emirates, which has a strong say in the Arab world, is a vector that Israel is going to use in the future negotiations with the Arab world, which Israel is surrounded by. And this strengthens my idea that in the next couple of years, the exchange of goods will be more and more regional in scope. And guys, with this being said, these were the news for week 22. Thank you all for watching. I really hope that you've enjoyed it. Don't forget to hit the like and the subscribe buttons. And as usual, until next time, keep your business safe. Thanks.